Hello traders and welcome to another video review. Today is Tuesday, September 20th, 2022. Let's find out what is going on the Forex calendar. Plenty of the important data had been released overnight, and it will be released today. We got the People Bank of China loan price rate, which is of course the interest rate in the other countries. We got the Reserve Bank of Australia meeting minutes released at 3:30, so it's gonna be interesting to see how the market of the Australian dollar reacted on this data. During the London session, we have German PPI data scheduled for this 8 o'clock. Expectations are that the German PPI will drop from 5.3% to 1.6%. So that's a significant drop in the producer price index. We will see what the real data are. They are worth to keep an eye on, despite the fact that they have only, as you can see, 2 dots, and this is yellow. So it doesn't mean it's a very, very important event. However, many of people will be looking at this kind of a data. Interest rate decision in Sweden is expected at 9:30, and then you have a gap because the next data are released as scheduled for release apparently at 2:30 as usual during the New York session. Building permits are scheduled for release at this time, together with the housing starts and the core CPI data from the Canada. As you can see here, we got core CPI and CPI data from Canada scheduled for release 2:30. Global daily price, daily trade price index from New Zealand is scheduled for release at 5 p.m. Then we got some speeches, first from McCall and then from the ECB President Christine Lagarde, of course. So at the end of the trading day, 10:30, we got the API weekly crude oil stock for all of you crude oil traders. So looks good, looks like a busy day. There is something for everyone during all of the sessions, including the Asian session. So let's take a look first how the ABA meeting minutes influenced the Australian dollar chart. This is 4-hour chart of the Australian dollar. And this is, as you can see, our latest move on this market. This move is down. We know it because the market is making lower lows and lower highs. As you can see, this sequence is perfectly continued. And this is another high, and this is another lower low. So the recent low was made at the level of 6,675. Then of course we got the test and the market tried to rally. However, just recently the market made a pin bar candle on the 4-hour chart. So we got this pin bar here into the technical support. We now should go. This technical support is 6,684. As I said, the local low is a little bit lower than that, around the level of 6,674. And it looks like the 30 periods moving average is still something that it's worth to keep an eye on, because the market reacts on this moving average. There wasn't much retracement here, as far as I can say, on the Australian dollar to the upside, but let's figure it out how much that was after this big pin bar was placed. I think it will be even less than 38%. Let me just put it here. Yeah, this is something like 23% or something. So it's not that much important. Because those are the levels that are very, very, very important for the situation on the chart. 23% means that bounce here is only a pullback, and then we should consider the downtrend to continue soon. And the 4-hour chart momentum represented by the RSI indicator is confirms that this market is under the strong bearish pressure. Momentum is at the level of 48, just below the neutral level of 50 on a 4-hour chart. So we should expect a continuation to the downside. If we switch the Australian dollar time frame to daily, we could easily see something different here, which gives at least a hope for the bounce to the upside. We see this 2-pin bars. This is the lower one, this is the smaller one, this is the bigger one, big down wicks. Okay, that means someone is defending this this level of 6,684. It doesn't mean I don't know who personally that is. What I mean is that bulls are defending this level, but I don't know exactly who they are. And it looks like this market wants to go higher. However, on the lower time frames, they don't even meet the Fibonacci retracement criteria yet. So very important now to keep an eye on 6,684. This is the level that was already tested not so long ago, 14th of the July 2022, before this almost 7% correction was made. Okay, so please keep an eye on this level, very important for the future price action. As you can see, market keeps defending this level. They don't want it to go any lower. We need to find out what's going on the euro dollar as well. We won't stop on the daily time frame chart. Let me just find out the correct chart. There you go. We will switch to the 4-hour time frame. We have a breakout above the local consolidation zone. So let me just establish, because we have the breakout, establish new levels here. We're gonna move this level towards the extremes. Okay, I got my green line, and I need the red line yet. Okay, there you go. This is the level. The first one was let me just change it to red. There you go. 1.0050, so 50 pips above the parity, and 55 pips below the parity, 9,945. So we have like 95 pips right now of the room for the market to move up and down. And as you can see, this market, after that short period of the consolidation, doesn't want to move any lower. It prefers the breakout to the upside. And the next target here, the local target, is of course 1.0090, 1.0122, and eventually the test of the highs from the 12th of the September, located at 198 pips above the parity. So the situation here is not dynamic, it's not very aggressive. The market is doing right now the job around the parity level, still around the parity level, and even if it breaks the parity level, it doesn't last long for the market to bounce higher. So this market is not doing anything major right now. Let's leave it like it is for a minute. And by the minute, I mean, of course, until the next review. So let's just switch to Canadian dollar. We got Canadian data coming today. So what is going on the daily time frame chart of the Canadian dollar? This is very interesting candlestick pattern. As you can see, at the top of this move, we got the pin bar. It looks like a shooting star. So very interesting thing is going on here, because even if we take the Fibonacci based extension measure right here and here, you can see that, where is my 100? There you go. This is my 100. You can see that the recent ABC movement, which is A, B, and then C didn't hit 100%. Okay, so there is no market geometry here. There is no 0.061 was broken, 0.78 was broken, so there is only 100% extension remains. So it wasn't hit, despite the fact that very strong technical resistance lies here between 1.3392, 1.3421, and 100% Fibonacci extension is located between this zone as well. Local high was made just above this level, 1.3343, and this is a clear pin bar on the daily time frame chart. However, the market conditions are not extremely overbought. Of course, that would be too beautiful. That would be very obvious signal to, of course, to go short. However, we got the pin bar in form of the most likely shooting star. Now we wait for the confirmation. This might be the situation when the candlestick pattern shows us the end of the whole three wave upward movement, right? We might call it even a kind of a end of the overall. Look at this overall, well, not that dynamic, however strong correction to the upside. This is not a trend. The main trend is down. This looks impulsive, okay, and this, since the last year, this is the June last year, this looks more corrective, okay? So that might be the end of this whole move. Of course, the one pin bar is not a 100% certain signal sent from the markets. However, if we consider the situation and the context of where this market is right now placed and what it's doing, then USD to the Canadian dollar might be considered, just because of this pin bar candlestick, as a terminated. Maybe just a little bit too early. However, it might get terminated, and now we see if this situation here will be continued. So if the bearish pressure will intensify, so we need to see momentum going below the level of 50 very soon. Let me just put this level of 50 in the very nice colors for you, so you can see it straight on. This is where we should go, neutral level, and then break below this level. I guess that would be somewhere around 1.3079. This is the neutral level, and the extremely oversold level might be below 1.2964 on the daily time frame chart with the current market conditions. So this is how it looks like on the US dollar to the Canadian dollar. Let's take a look at the S&P 500 at the end of our review. What is going on there? Well, what do we see here? Daily time frame chart, we got this recent very strong movement to the downside, bounce, very strong movement to the downside, erasing 4 days of the correction. Then the extension towards the level of 3,836. That was the low. We are right now out of the we are below the local trend line. It looked like the wedge or something like this. We are below the 30-day moving average. We are below the trend line. We are below the recent technical support. Now it's of course the resistance, and it's around here, I guess. Okay, wrong color, wrong thickness. Let me just fix that, and we will see straight on what is going on. What is going on here? So we are below this level. The market is trying to test it. Of course, we will see how it goes in the next during the next few hours, of course. And this is the swing we are talking about. ABC to the upside, correction. Then this is complete smash down of the bulls, extension to the downside there, and now the bulls are trying to move higher. The next, this is that of course trend line, that would be resistance, and the market should reverse lower and go towards the technical support located at 3,739, 3,726. So this is our next target. Momentum is already negative. They are trying to bounce, but they might fade on the S&P 500 index. And if the S&P 500 index will go down by the during the Thursday and Friday, and maybe even today, please notice the fact that there will be second red candle on the weekly time frame chart. So that would be very, very important. Currently, because it's only Tuesday, this situation is much more stable, not that much dynamic, but we still have the 4 trading days, including Wednesday, Thursday, and of course Friday close will be very important for the S&P 500 index, because the rest of the financial markets might follow the S&P 500, and basically if it goes down, the rest will follow gold, Bitcoin, and the euro. US dollar possibly might even consider to go up again in the nearest future. Okay, that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.